Record button here. All right, I'd like to welcome everybody to our summer series webinar. Today's webinar is on internal controls, preventing employee theft and fraud. We're excited about these webinars. We're getting more and more traction every week, and we appreciate everyone's participation here. Looks like we got a good group today. Next week's is on the web, having a strong web presence, and then I think you might have got the schedule that we changed one in July. I think it's 8th is going to be on Google, and it is. I went to a presentation over in Boise last week with this lady that talked about making sure that you have your presence known on Google, and it's going to be she's got like a 4-hour training that she's going to try and compact down into 30 minutes, and it is going to be a great presentation on making sure that you have the presence on Google. So we're excited for our next ones coming up. Today we have Chad Windward. Chad is one of our tenants here at the Idaho Innovation Center. He's been a tenant here for, I think, a couple of years. Is that right, Chad?
Yep, that's right.
Great. He's got a business called Business Sense. He is basically a CFO for hire, and he is has great knowledge of what it takes to operate a business efficiently and effectively. And so we've asked him to present today on these internal controls. And we appreciate his time, his preparation, and everything that he's done today. So I will, without any further ado, I will turn it over to Chad Windward, and maybe you could give just a little bit more of a history of what your business history is.
Okay. Thanks, Brian. So, like Brian said, my name's Chad Windward. I'm a CPA. I'm a very non-traditional CPA. A traditional CPA tends to focus on tax and public accounting. And most of my focus is on management accounting, which is using numbers and accounting processes to make a business run smoother and to make a business more profitable. And I spent about 15 years in industry in roles from CFO to controller to staff accountant type roles, and I've been operating Business Sense for about 4 years now. Today, I want to talk about a topic that it's a big topic, and 30 minutes really isn't adequate to cover it, but it's a topic that often gets ignored. And so I'm hoping just to scratch the surface, and more than anything, just open your eyes a little bit to the topic of internal control and really one small aspect of internal control, and just help you understand what place internal control has in your business. So here's a little bit of just a quick outline of what we're going to cover. We'll just start by talking about what internal control is. Internal control is an accounting procedure or system designed to promote efficiency, safeguard assets, and avoid fraud and error. So when we talk about internal control, we often talk about making sure that we get accuracy in financial statements. We also want to avoid fraudulent activity, and we want to avoid theft. And what we're really going to focus on today is safeguarding our assets from embezzlement or employee theft. And the first thing that really comes up with this topic is, a lot of times we're talking with small businesses, and the first question is, does this really matter to me as a small business? I know, big Fortune 500 or some company that has millions or even billions of dollars floating around, maybe this matters, but does it really matter to a small business? And I'll just go through and give a little bit of an illustration of what happens if you ignore internal control. Here's a little clip from an article. This is from 2013. Here's a business that closed its doors. Those of you who are running a business, you know how tragic that is and how hard it is to get your business up and running and profitable. Here's a business that closed their doors, 90 jobs lost, 5.7 million stole from this business as a result of a lack of internal control. And that quote, it totally ruined us. That sums it all up. In 2010, there's a study that showed that the average embezzler steals $17,656 a month, which is astounding. Most people say, man, if If I was missing $17,000 out of my business every month, I would know for certain. And yet it's amazing how often that happens, and it goes undetected. The Association of Certified Fraud Examiners estimates that 7% of all revenue is lost by employee theft. Now, on average, an average profitable business is going to be profitable around 10%. There are those that are higher, there are those that are lower, but just on average, 10% net profitability is pretty normal. If you consider that 7% of revenue is lost through embezzlement, I mean, that's almost an unbelievable statistic. But you know, a business that would normally have a normal 10% return, and if 7% of the revenue is lost, that means they're getting a 3% net profitability, or maybe a low-margin business that's targeting 5% net profitability in a high volume. Just like this business over here, that lack of internal control can make the difference as to whether they stay in business or whether they go out of business. I'm familiar with a business down in the Utah area on the Wasatch Front. There's a brother and a brother-in-law who went into business, and you know, they're relatives, so of course they can trust each other, and they went through all the pain and the anguish of getting a business up and going, and those first, you know, several years where you're working long hours and you're not getting paid, and they were finally making money. And the one partner was in charge of the operations, the other partner was in charge of the financial end of things, and the partner who was in charge of operations at least looked at the financials, and things looked normal. And lo and behold, out of nowhere, they ended up going out of business as a result of the one brother-in-law embezzling. And what was happening there is the money that was withheld from checks that should have been paid to the IRS with payroll, this brother-in-law was pocketing. And so the other brother-in-law that was in charge of operations didn't see any money missing per se, because that money really should have gone to the IRS. But by the time it was known that he was putting that money in his own pocket, and by the time the IRS was after him, it was way too late, and they were so far upside down that they ended up losing their business over it. And again, we have the mentality of thinking that large businesses are really where this matters, and yet small businesses are more susceptible to fraud than large businesses. Ever since Sarbanes-Oxley came out, one of the aspects of an audited financial statement is a statement on the adequacy of internal controls. And so large businesses at least have the conversation. A lot of times a small business just fails to have the conversation because they're focused on operations, they're focused on paying the bills and growing, and a lot of times it's not even talked about. The other part about this is the way internal control is taught from a textbook. It often takes a very large accounting department to implement internal control. You know, when you do a deposit, you should have one person receive the checks, and one person receive the checks and prepare the deposit, and another person should take that deposit to the bank, and then a third person entirely should record that deposit. And often in a small business, you don't have a big enough accounting staff to do that. You might have one part-time accountant or two accountants in your business. And so sometimes because traditional internal controls can't be implemented, then nothing is done. We've often heard the statistic that 80% of businesses that start out go out of business within 5 years. The U.S. Department of Commerce estimates that 1/3 of all business failures can be traced to employee theft. That's a huge number. So just by looking at internal control and making sure that this isn't something that you fall prey to, you're really increasing your odds of being successful as a business owner and operating your business. The question comes up, at what point do I need to think about internal control? How big do I need to be before internal control really applies to my business? And my answer to that is as soon as you are big enough that anybody in your organization has anything to do with the money or the accounting other than yourself, then you need to start talking about internal control. If you're small enough that you're the only one who ever touches the money, you're the only one who ever touches the bills, you're the only one who records accounting information, then you probably don't need it yet. But as soon as you're big enough that another party's involved, you need to start looking at parts of internal control. Another real misconception that we have in this area is we think, oh, this is Idaho, you know, we're different than the rest of the nation. We trust each other. We have people that have a strong moral base. We maybe don't need to worry about this as much as people in the big city. Here are just a few articles that I've clipped from the paper over the years. Idaho Falls, $35,000 stole from 2 dentists. I've got a good friend, and his father-in-law owns what they refer to as the $500,000 RV. That RV is worth about, it might be worth $3,000 or $4,000, but he runs a dental practice, and over a period of probably about 10 years, one of his very trusted employees embezzled $500,000 from their business. And what they recovered from that was this RV. And so the family talks about this exotic $500,000 RV. But really, what happened there is that's a dentist who was focused on his dental practice and didn't look at internal control and lost $500,000 out of a dental practice. Here's a situation over in Boise. $64,000 from the county. You'd think in government, as much bureaucracy and policy that there is in place, that controls would be there to avoid embezzlement that takes place there. In this case, this guy was being paid as an employee and also was billing his time as a contractor. So he's getting double paid and ended up stealing $64,000 before he was caught. Here's a situation in Idaho Falls, $275,000 embezzled. Here's a situation in Pocatello. Well, it was reported out of Pocatello. It was actually based out of Swan Valley. This is a bank. You'd think if anyone would have internal controls prevent, this would be a financial institution. And yet here's a bank that lost $142,000. Twin Falls, a college, again, government entity. You'd think that there'd be controls built in place. $530,000 embezzled. Blackfoot, $1.6 million embezzled. Museum of Idaho, $82,000 in cash embezzled. And the truth is that if it says $82,000 in the paper, that's the amount that they're able to identify. And it's just like the iceberg. That's the tip of the iceberg. And in all likelihood, if they could identify 82,000 or 500,000, there's a lot more that was embezzled that's not recognizable. And so we don't have to look around very far to see that even right here in our backyard that this kind of stuff happens all the time. Before I went out and started my own company, I worked for 5 different employers in accounting and management roles. And of those 5 employers, I know 4 of them have had embezzlement issues. The other one, I don't know of a specific embezzlement issue. I'm quite confident that they probably had one. But just in my own experience, I can confidently say that at least 4 out of the 5 of my employers dealt with embezzlement of some sort. And so if you're in business, and if you're big enough that it's someone other than you, you've just got to recognize that if you don't take action, that the very strong likelihood is that you'll be subject to this type of thing. And you don't want to change your mindset to the point that you don't trust anybody, but we also, the old adage, trust but verify, really comes into play here. And as we talk about internal controls, a lot of times as business owners, we don't want to put them in place because we're afraid that for us to put those in place makes our accounting personnel or our other personnel feel like that we don't trust them. In reality, this is as much a protection for them so that they cannot be accused falsely as it is for our own business. So I want to walk through just one little scenario of how easily this can take place. Many times in a small business, we'll hear someone say, you know what, we really don't handle that much cash. I could understand if we handled a lot of cash, we'd need internal controls because cash is easy to misplace or to embezzle without. But we only take checks or we only take credit cards. Let me just show you one little scenario of how easy it would be for a dentist office, for example, that takes no cash and how easy it would be to embezzle. So step 1, a patient writes a copay check to ABC Dentistry and gives it to the receptionist. And as a dentist, we can say, okay, that's a check, it's secure, it's not like that person can go and take it and take my money. It's written out to ABC Dentistry, I'm safe, I don't need to worry about it too much. Well, that receptionist then can slip that check in the desk drawer to be retrieved later rather than putting it with the rest of the checks to deposit. To conceal that, it takes about 10 minutes and about $100 to set up an LLC with the Secretary of State. And that receptionist could go and set up an LLC that says ABC Family Dentistry instead of ABC Dentistry. And then they can go and open a bank account in the name of that company, ABC Family Dentistry, where they own the account and they're the sign on the account. Now, when no one's looking, that receptionist can take that check and go and deposit it to the account of ABC Family Dentistry. And the bank's going to look at that, and it's written out to ABC Dentistry, and the bank's going to look at it and say, oh, that's close enough, ABC Dentistry, ABC Family Dentistry, and we're going to deposit that check. And then the receptionist may make a contractual or a price adjustment to the patient account so the patient doesn't show on their account that there's an amount that's not due, and so it's concealed. So very, very simply, this isn't overly scientific, it isn't overly technological, a very simple, easy way for a check, which you would think would be a very secure way of taking funds, to be taken from a business. I don't have a slide up on here, but credit cards are the same way. Often we think, oh, I just take credit cards, that should be secure, someone can't steal from me. But I don't know if you've ever used Square. How easy would it be for somebody to set up another credit card account? Your business is ABC Dentistry, the other credit card merchant is set up as ABC Family Dentistry, and then have someone run the credit card on their Square account, or have a second credit card machine that's identical to yours, only it goes into their account. So no matter what the method is that you take payment, there's ways for that money to disappear from you if you don't have processes and procedures in place. I'm going to just touch on a handful of simple ways, things that you can do to minimize your risk. And we've got about 5 minutes to cover these, and yet these, if you'll do these things, you'll probably eliminate 90% of the risk in your business. The other 10% probably takes a lot more effort. But first of all, the number one rule is don't give your accountant signing privileges on your bank account. So often we say, well, for convenience sake, the accountant, they're preparing the checks, they're sending them out, we need them to sign it because it's a nuisance for someone else to sign it. And yet, that's the number one rule that you've got to do, is you do not give the people that are in charge of tracking your money signing privileges on your account. Maybe you're not always going to be there to sign the checks, but if you have one receptionist who has nothing to do with accounting, and you have an accountant, let the accountant prepare the checks and let the receptionist sign them, or something along those lines, so that you at least have two people involved with the signing of those checks. And if embezzlement's going to happen, it's going to happen among a group of people instead of a single individual. Second, be nosy in the details of your accounting. Spot check what's going on. Know who you pay for what products and services. We talked about that one county manager who was an employee and who also billed the county for contract services for consulting. You ought to know your vendors, and if a new vendor shows up and you're not sure what you're paying for, take the time to know what they do. And when you look at your financial statements, if something looks out of whack, look at it. It's the old adage of the visibility of a lock is often as valuable as the lock itself. If you just poke around and prod around, a lot of times that's enough for your accounting personnel to know that you're involved, and they're not going to get away with something if they try. And so just be involved in your accounting. Don't be so involved in your day-to-day operations that you don't take a few minutes to poke around and look. Third, probably, I don't have statistics, but one of the most common places there's fraud and embezzlement comes down to the use of company credit cards that are unauthorized, or employee reimbursements. Either an individual has a company credit card and they go out and buy something that's supposedly for the company and yet it's not really for the company, or they buy something using their own credit card and seek reimbursement, and it's not a legitimate expense. So make sure that you're especially careful with your policies with employee reimbursements and credit cards. Fourth, double check your payroll and payroll rates from time to time. Payroll is something that happens every 2 weeks, and we often just ignore it. We maybe look at what the total payroll amount is, but we often rely on just one individual to take care of that. I was involved in a situation where one of the accounting personnel was simply giving himself an extra payroll check every once in a while. And so, just look at your payroll checks, look at the rates, look at the pay stubs, and just glance at that stuff once in a while. That's kind of an automatic process. It's really easy to ignore, and yet it's an area where fraud and embezzlement can take place. Fifth, be very aware of cash and check handling processes. This kind of ties into the example that I gave. If you're taking cash, or payment of any kind, I don't think it's a bad thing. You know, Wi-Fi, IP cameras, security cameras above the area where you take money, those are very inexpensive, and it puts up a set of eyes, and you can record what's going on, and if nothing else, it just creates some diversion to that type of activity, and be aware of how easy it is to siphon off funds when you have employees who are taking money. And this number 5 is probably something that we could spend a couple of hours talking about what really needs to be done, but more than anything, be aware of that and put some checks and balances in place for that. And finally, have someone outside of your accounting department reconcile the checking account. Reconciliations of the bank account we usually think of as an accounting role, so we have our accounting department do it. And yet if there's someone within the accounting department who is embezzling, then the reconciliation process is also an opportunity to cover that up. So maybe you have someone outside the company, maybe you have your tax accountant. You may have to pay a little bit of money to have someone else do the actual reconciliation, but by having someone outside of your accounting department do that reconciliation, then you have a chance of catching something if it's going on and catching it early. And again, it's just an option of prevention. So these are six things that you can implement. They're not overly cumbersome. They take a little bit of overhead, but it's not an enormous amount of overhead. You don't have to hire 6 more people in your accounting department to separate duties. And if you can implement these things, then you're doing more than 90% of small businesses, and you literally will reduce your risk of theft or embezzlement by 90%. So that's all I have today. I'm glad to answer questions. Again, in summary, my whole goal in this is to hopefully just open your eyes. Most of us are trusting, and we should be trusting. Life's too short to go around thinking that everyone's cheating us. And yet at the same time, I hope you recognize the risks here and take a few of these steps to protect your businesses from this very real threat to your business. Any questions from anyone or anything else you'd like me to cover, Brian?
Chad, just a couple comments and then a question. I used to have a business where I had a lot of cash going in and out, and I had some people that they'd take the cash out of the deposit every night, use it to pay their own bills. It was eventually getting back into the bank through some creative accounting on their part, but they would do it a couple of weeks down the road. But I found that I was paying a lot of rents and a lot of IOUs that people had and things like that. What are some controls that I mean, when people are doing that kind of stuff, what's the consequences? For someone that's $1,000, $5,000, what's the consequences of something like that?
One of the things that's interesting to note is for every issue of embezzlement that hits the papers, if there's one in the paper, there's probably 10 that never makes the paper, because these kinds of things happen and people don't want to press charges, and they don't want to be embarrassed. They don't want their name in the papers showing that someone stole from them. And so often nothing happens. Often it's a slap on the wrist and someone gets fired and they go on to the next company and embezzle from the next company. Several of these that we were looking at, people were looking at felony charges. I honestly don't know what the penalty is. I don't know what the threshold is from a misdemeanor to a felony, but grand theft. People literally can lose their careers and spend significant amounts of time in jail.
Okay. Good. I can tell you that my experience is that I prosecuted every single one, and I never felt like, I never knew whether I got any of the money back. But it was, I guess, the joy of making sure that I prosecuted everyone that did and had to set the precedence on it. But was good. So.
Yep. The other question you asked is, what are some controls that you could put in place? So we talked just briefly about have one person who receiving the cash or the money, a second person prepare the deposit and take the deposit to the bank, and a third person actually deposit or record the deposits. And you can really, if you get creative, you can break that down to having 2 different people involved rather than 3. But if you have one person recording deposits and someone else taking money to the bank, then you cut out that opportunity to have those funds disappear without them being detected.
Okay, very good. Any other questions, comments out there from anybody? Awesome. Well, I appreciate your time, Chad. Great information. Every business out there needs to hear this kind of stuff because, I mean, it happens, and it's and where I see it, you know, there's a lot of inventory that can be missing, let alone the cash and deposits and credit cards. There's so many areas that a business can be had in that I think this is a great topic. So thank you for your time, Chad, and we have recorded this. So if anyone, I know there were some people that got on late. I got a few texts that people were struggling getting on through their phones. So I've got this recorded. If you know of anybody that this could do their business good, let me know, and I can send them out a link to my Dropbox that has access to all of the recordings of the webinars. So thank you, Chad. Thank you, everyone, for participating and
Thanks,
being
Brian.
here. And have a great weekend, everybody.
Thank you.